Okay, well, I guess we're back. Sorry, everybody. We were planning on doing this, the remainder of the interview last weekend, but I had a bit of a problem getting in on my network. I was locked out of my computer, and later I had a cart blow up in the air and slam into my car. So it was a real bad second half of the day, but we're back now. So I'm back with my friend Jared, the Bitcoin guy, and we're going to continue our discussion of Bitcoin and gold and the differences between them, as well as other types of cryptocurrencies today. So welcome back, Jared.
Glad to be back, Paul.
Okay. Let's resume with the questions that the subscribers raised. So the first question on our list is, could you please explain the role that Tether plays? First off, what is Tether?
So Tether is what's known as a stablecoin, and basically that's one implementation of trying to make a digital dollar, because once you get into Bitcoin, obviously the volatility scares people. So because you can trade digital assets trustlessly, what you end up wanting is a way to easily move in and out of dollars when you feel like it's overvalued or undervalued. So one of the first big projects that took off has been the stablecoin projects, Tether being the biggest. And their solution is just to basically buy or have a bunch of dollars in a bank account and issue tokens on Ethereum's network that match that bank account one-to-one. There are other implementations of stablecoins that don't rely on that, but the most successful, I think, are Tether and Gemini dollars, and USDC is Coinbase's version of that, and they all use that same mechanism of just hoarding dollars and issuing their stablecoin against it on whatever smart contract platform they like the most.
I've heard rumblings that Tether is one way that the cryptocurrency market might be manipulated. Could you talk about that a little bit?
Yeah. So in a way, yes, I can see that as being a concern. It's almost like I've heard it the other way too, though, because if you need dollars into the crypto ecosystem, it's almost like Tether should count towards Bitcoin's market cap. So that's what a lot of people seem to think it does, is it inflates it. But what it's really doing is making those new financial rails in the crypto sphere become more fluid, easier to manage back and forth. Because if you deal with a bank, if you've ever had to transfer a large amount of money through like a ACH transfer, that takes about 5 days for the bank to check all the boxes and transfer your money. Whereas in the realm of crypto, it's basically you set the transaction on the network, hit the send button, and 15 minutes later, it's done and settled. I don't think it's like at this point, I can't see how you would use that to manipulate the market, just because there's so many of these stablecoin projects. There are ones in Tether, I think, has Tether Aussie dollar now. It's got Tether for the Japanese, or for the Chinese renminbi. I think there's one for that too. So really what it's doing is trying to provide liquidity in real currency terms, like what you could use every day, that's pegged, that you can peg against Bitcoin or any other cryptocurrency for trading purposes. So, I mean, it is in the sense of it's growing the ecosystem. The big concern with the way those stable coins are done, though, would be are they running a fractional reserve where, I know Tether's biggest concern is they got hacked at one point and lost a bunch of money. So I think their bank account is like 75% they have of what they should have versus the amount of Tether issued. But the funny part about that is that that's still, compared to the traditional financial system, I almost think that's better. But I could deal with your opinion on that too.
Well, I can't really comment. I don't have much experience with Tether. But the next question that we have is related to Bitcoin, but it's more cryptocurrency in general. What are the alternatives to Bitcoin?
So And this is where you're going to end up getting me in trouble with some Bitcoiners, because Bitcoin is special in that it had years to grow up and become what it is before anything else existed in this space. So the alternatives to it are basically, forked projects, different implementations of the proof of work concept. But to me, the real difference is with Bitcoin, you're talking about something that at this point, the protocol is set in stone. So you've got that extra level of trust where with almost, I can't think of another project where if you look at the lead to the project, they couldn't massively influence where it's going at this point and convince everyone in the community to change the code in a way that might not be beneficial to the network. Even Ethereum, which is the second biggest right now, that's about to go through a giant upgrade. And they've got a lot of smart people working on it. So yeah, it'll probably be successful, but there's always the possibility that in being successful, they introduce some new bug into the code that then has to be dealt with too. So yeah, there are a lot of other cryptocurrencies that are out there, and some of them are trying to do what Bitcoin does. But the big difference with Bitcoin is, I think in the Bitcoin community, they would call it the Immaculate Conception, where nobody cared about Bitcoin when it first came out. It was this came up in the back channels of the internet in a forum that was meant for cryptographers and cypherpunks that just took the idea and ran with it. And what came out of it is this giant open source project that's, one of the biggest open source projects in history. I kind of akin Bitcoin to Linux, where everyone thought that in the Linux community thought that Linux would take over the desktop, and it never really did, but it took over basically everything else on the back end. So if you're running a virtual machine where you get like served up a Windows desktop somewhere, almost universally, that backend that's serving you the Windows desktop is running some flavor of Linux in the background to give you that Windows desktop. Because the idea of many hands, many people looking at the code makes for more stable code. Right. So when you have
it's an interesting analogy that you bring up, right?
Yeah.
Because, there are a few flavors of Linux. I know there's Red Hat, there's Ubuntu, there's a bunch of different Linuxes. How many cryptocurrencies are there out there?
So I think the last time I looked, there's something like 6,000 or 7,000 cryptocurrencies. You have to take that number with a little bit of a grain of salt, in the sense that over half of them are probably just tokens running on a network like Ethereum, where initially, Ethereum was designed by a 16-year-old kid when he was trying to get the Bitcoin developers to make this change called colored coins to Bitcoin, where the idea was, in essence, coloring a Bitcoin a certain way to make yourself tokens that would represent something else. And all the open source developers were like, this is too big a change. It could introduce too many bugs. We're not going to do this. So he ended up writing the paper for Ethereum and getting a bunch of investors on board with that. And that's become very popular in Silicon Valley for that reason, because if you want to create your own cryptocurrency where you've got something trustlessly tied to the real world, like Tether, for example, you need to create something that people can trade with trustlessly. And what ends up happening is you write a smart contract that creates X amount of tokens on Ethereum's network that are called Tether, and match that to your bank account. But really, the only thing binding those rules are the company that's issuing them has control of that smart contract. So in a way, you're kind of limiting the trust down to just between you, the person that has the Tether, and the organization that issued the Tether. And all those other middlemen in that situation are cut out from the traditional world.
Okay. So, I remember for a while when cryptos really started taking off, everybody seemed to have a crypto coming out. I mean, even Paris Hilton was promoting a crypto. And I'm sure that she didn't actually create it herself, but you get the idea. I mean, is there a concern that these cryptocurrencies are so easy to create?
Well, I think what you're talking about is what are they actually doing? When you talk about creating a cryptocurrency, yeah, there are people getting rich by doing exactly that, but they're kind of preying on consumer ignorance when they do that, because there's also a lot of people trying to get rich quick in this space, and they'll buy a project just because it's new, hot, flashy, and cheap, thinking that they're going to get rich that way. And some of them actually do, scarily enough, but really it's not something that I would consider anything more than degenerate gambling in that sense.
Well, I mean, unless you're an insider, right? In which case you get to sell whatever coins you have to whoever's coming into the market, right?
Yes, and there are a lot of projects that have done that as well. But that's also, just because even if the majority of them are scams, there are still going to be legitimate ones in there. So to me, I know I've kind of made this point to you, is I kind of see this as an ecosystem, and Bitcoin being, if you want to think of it as the apex predator of that ecosystem. It's the lion in the jungle, right? Like anything that you can think of that you could do with another cryptocurrency, you could put a layer on top of Bitcoin to do that. And that's why if you listen to someone who's just a true Bitcoin maximalist that believes that Bitcoin's the only one, they're going to tell you that eventually Bitcoin will eat everything, which could be true. But to me, it seems like, everything in technology is a trade-off. So there's this thing in cryptocurrency called the blockchain trilemma, where you can have security, decentralization, and speed. And you pick two of those three, and you're kind of trading off between them. So Bitcoin's the only one I've seen that's really been focused on security and decentralization throughout its entire existence, because that's been the primary concern. And when you hear someone trying to replace Bitcoin, they're generally trying to replace it with something faster, which might be a way to deal with that problem, is having something faster be an intermediary or a carrier of value. But that could also be a second layer solution, like, say, the Lightning Network, where, if you want to transact quickly with Bitcoin, you could use something that's less secure, but you're only putting a little bit of Bitcoin into the Lightning Network to do your day-to-day transactions. One of the interesting parts about some of these smart contract platforms is that almost universally, one of the first things they port into them is Bitcoin. So for Ethereum, there's multiple projects where, in order to get Bitcoin liquidity into the Ethereum network, there's a few different tokens where you're basically wrapping Bitcoin in an Ether token, and then someone who has those Ether tokens can then go back to that smart contract and unwrap that Bitcoin and get it sent to them on the blockchain, the Bitcoin blockchain.
Okay. One of the concerns that people have about Bitcoin is the potential for inflation of Bitcoin due to forking of Bitcoin itself, or the introduction of all of these new alternative cryptos. So is there a concern about inflation in these cryptos driving down the value?
Well, that's only if you think that they're the same.
We do. I just lost your voice, by the way. Could you check your audio? Yeah,
I can hear you. You can't hear me?
Sorry. Yeah. Maybe you stepped away from your computer. Go ahead.
So, I only see that as being a problem if you think all of these are the same. Because to me, like, cryptocurrencies that are created have different properties and are optimized for different things. So really what you're asking is could something take away Bitcoin's role as the store of value within the crypto sphere? Because that, to me, is really where the store of value argument comes from for Bitcoin. In I think there will be other successful cryptocurrencies, but I think that they all hinge upon Bitcoin's success. And the reason I think that is if you look at where cryptocurrencies are getting priced, if you go to CoinMarketCap, Paprika, CoinGecko, any of the sites that track the top cryptocurrencies, what their price is, what their market cap is. What you'll get is you'll get two numbers to value them. And the first number is going to be what's the value in my local currency? What's the price at right now? And that's the number most people look at. But on every single one of them, there's a second price. And that second price is priced in Satoshis, which is the lowest unit in Bitcoin. So everything in the crypto world is priced against Bitcoin almost universally already. And to me, you're talking about, even if something's better, it's got to be so much better at doing that store of value in crypto than Bitcoin that people are willing to change that over once it's already been established. And I just can't see how that happens without something major happening to Bitcoin itself, where the protocol fails at some level. And for something to do that to Bitcoin, it's going to do that to all cryptocurrencies, probably all computer tech now, because we're using the same encryption we use to make cryptocurrencies work that the internet uses to keep itself secure.
Okay. Well, here's another question from a subscriber. So Bitcoin halving. So we're familiar with Bitcoin having this built-in feature that every few years or so, they cut the rate at which new Bitcoins are awarded to miners in half. Is that necessary to force the price up?
The original purpose of that is to do what's called bootstrapping the network, to give people an incentive to mine. The idea is that over time, what's going to happen is not only do they collect, that's called the block reward that halves. So it started out at 50 Bitcoin per block. Like if you were the lucky miner that got to write a block in, you got to write this special transaction in that gave you 50 Bitcoin. And then after the first 3.5, 4 years, that got halved to 25 and then 12.5. So every time it halves, there's less of a reward, but the price has almost universally been higher. But the other thing those miners get to collect is the fee that gets paid. And the fee is in Satoshis per byte of data. So you can write any data you want to the blockchain, and you can set whatever price you want. But what the miners are going to do is they're going to take whoever's paying the highest price to get their data written. If there's, more than they can write in a given block in the memory pool currently, they're going to pick out whatever has the highest fees attached. And then if they're the one that writes the block, they're going to collect the block reward, plus they're going to collect all those fees. So over time, the idea is that those fees start to take over for where the block reward dwindles down that. Mm-hmm. And initially, yes, that was necessary in order to incentivize people to participate in that proof of work mechanism to make the network secure. Okay.
All right. So a few of my subscribers asked this question, probably because I presented some models talking about the relative valuation of gold versus the dollar. Are there any models that can be used to determine if Bitcoin is undervalued or overvalued?
So actually, yeah, now keep in mind, any model you have is only going to be good until it isn't, right? You try and find a data model that fits in what's happened in the past. And if it fits, you're tentatively looking at it as being a good model, but it only works for as long as it works. And at some point, if it, breaks that model, then you've got to come up with a new model. So there are a few that have been working since Bitcoin's inception that seem to fit the data that's been there for price. We'll either put links in the description or maybe even put the graphic over top. But the two that I like the most are the Bitcoin rainbow chart, which is a logarithmic regression that shows where Bitcoin is on a logarithmic adoption scale. And there's a website for that where you can even see where we're at this moment and look where overvalued versus undervalued in that logarithmic chart. But there's also the stock to flow model, which I'm a little more tentative about, but I'm starting to get a little bit more confident in that one, where you're valuing assets based off of the existing stock versus the amount of new incoming supply. And so a guy out in, I think he's from Sweden or Finland, came up with this model. He works for a bank, and he used gold and silver to fit the model. And he found that they fit into that model fairly well too. And he's got a pricing mechanism for Bitcoin in it where he looks at each of those happenings and what they should do to the price over time.
So it sounds like the log rainbow chart is more like a technical analysis type approach, whereas the stock to flow model is more of a fundamental type analysis. That
would be an excellent description, yes.
Okay. All right. Here's another question. All right. It seems like it's an opinion disguised as a question, but I'll ask it anyway.
That's fine.
How can something man-made outlive something that's produced by nature?
And it can't. That's the bottom line. But something that is man-made can last as long as mankind can last, I think, because what you're ultimately talking about is an idea or a protocol. I mean, anything computer code wise is just an abstraction of some type of thought process we could go through, like on a logic level. So the idea is that if Bitcoin's protocol is just that, it's a logical progression, then you'd basically be talking about anything that could destroy the current knowledge base of mankind could destroy Bitcoin, but you're talking about something so catastrophic in order to do that. So effectively, I kind of see them as the same, but there are instances like, yes, I would much rather hold gold if a nuclear war broke out, most definitely. But apart from something extremely catastrophic like that, I tend to like Bitcoin more.
Mm-hmm. Well, I guess the argument could be made that, from a dynastic standpoint, if your family is living for multiple generations and you're handing down wealth over those generations, there will be a point in time in your family's history when Bitcoin will be no more. And, the gold will still be around. Whether or not people are still using gold, I guess that's up for debate. But I guess you can make the case that because gold is a physical and durable asset, it should persist forever, right?
It should, no, and that's Bitcoin. I mean, gold will be around until the end of the universe, so it definitely outlives Bitcoin. But my point is that you don't uninvent a technology once it's been invented, and that's all this is. It's a technology that you could actually, if you wanted to. Interesting tidbit, you could actually mine Bitcoin by hand where you're just randomly making hashes, doing the math. Someone's even got a paper on that on Medium on how to do that. Now, you're going to do that. If you tried it, you would be doing that for your entire life and never even come close to mining a Bitcoin because you're competing against computers doing, a trillion of those calculations a second. But the idea is that it's just an idea. So really, as long as the medium is in place of the internet, the infrastructure of technology, Bitcoin will be around until the end of the internet at this point. Just like TCP/IP will be around until the end of the internet at this point. So I don't see those two things as being necessarily as different as most people would see. Just for that reason, because I think it takes something truly catastrophic to eliminate Bitcoin from human civilization at this point.
Well, I have to joke a little bit because yesterday my wife realized that she still had a MySpace account, and she went in and deleted it because nobody's really MySpace anymore. So I guess things can become obsolete. So
there's a big difference with that, though. I mean,
Why?
And that's you're talking about something that's a centralized counterparty running servers. And that's my point with most most altcoins is that, most of them are still in that nascent phase of they're not truly decentralized because there's a central counterparty that could fail on you. Whereas Bitcoin doesn't have that kind of risk anymore. There's no one you can go to that can actually change the protocol at this point. It has to be it has to be something that the whole community agrees on. And it's such a big community and they agree on so little that it's pretty much down to bug fixes and minor enhancements.
Can you see Bitcoin ever rendering gold obsolete?
The only way I see that happening is the same thing, something truly, I guess I would call that one truly revolutionary in the sense of if Elon Musk in a decade pulls down an asteroid made of solid gold, that would be how gold becomes obsolete in that sense. Because there truly is no limit to the amount of gold in the universe, but there is a scarcity here on Earth. So if we ever got to the point where we're mining asteroids, then Bitcoin's scarcity proposition where that scarcity cannot be changed, then that takes a big boost. But gold's always going to have the recorded history on its side. Like human beings have been using it for thousands of years. So unless there's some kind of massive, massive hoard of gold discovered, that's the only way I could see Bitcoin displacing it completely.
Okay. Well, how about improvements in technology? Will they ever render Bitcoin obsolete?
Well, that goes back to Bitcoin can still evolve. There are still bug fixes and there are still minor enhancements made to the protocol. So it's evolving in the same sense where, I see it as the base layer of digital cryptocurrencies. It's the store of value for the internet, the internet's reserve currency. So as long as that's around, I don't see it as a competition. I see it as other cryptocurrencies are trying to make different trade-offs than what Bitcoin has traded off. And I don't see many, I shouldn't say there aren't any, but there are almost no projects that are trying to do the store of value. And the cryptocurrency projects that are trying to do store of value, they're trying to do it through different mechanisms than the way Bitcoin did, because you can't compete with the established history of what Bitcoin is at this point. Like if you create a cryptocurrency tomorrow, you're always going to have 10 years less of a track record than Bitcoin does at doing the same thing. So even the ones that are trying to do store of value, they're trying to do it through mechanisms of rewarding the people that have the cryptocurrencies and are staking them with the inflation that naturally is going to come in. So it's almost like you hold a token, you get more of that token over time, and thus trying to bootstrap it as a kind of store of value, almost like a certificate of deposit for a bank. But no one's actually trying to displace Bitcoin's role in the crypto ecosystem as a store of value. The best ones I've seen that might at some point make a dent in it are the privacy coins, because people tend to like privacy. But even those have their disadvantages. Like there's actually an advantage in Bitcoin's pseudonymous nature, the ledger. Anyone can take a public key and verify how much Bitcoin that private key controls. That in and of itself has some value, and being able to audit the total amount of coins by anyone that's got a copy of the blockchain also has some value. Whereas if you were to go to something like Monero, no one can see any of the transactions, but that also means that no one can actually take that record, that blockchain, and audit how many exist. So if there was an inflation bug in Monero, people wouldn't know, people might not know about it for months as someone's printing Monero tokens.
Now, what happens if quantum computing becomes a reality and renders cryptography obsolete?
That would be back to that would render all of our security on the internet obsolete. With Bitcoin, what the general consensus is there would probably be at that point a a major upgrade where quantum computing, if you can break regular cryptography with quantum computing, you can also create new cryptography with quantum computing. So what would probably happen is you'd end up with developers that create a quantum version of Bitcoin, and everyone probably moves over to it, or some people stay behind and there's a chain split like there was with the Bitcoin Cash chain split where, splitting off two different people disagree on the rules.
What happened to the value of all the Bitcoins that had been mined throughout history? I mean, the holders would then be faced with a replacement for Bitcoin that had to be more complicated cryptography, right?
Well, that's the great part about a chain split is it's almost like when you talk about a chain split, what you're talking is the rules diverge at a certain point. So in essence, the blockchain up to that point of the divergence is the same, but afterwards there's two separate copies. So when Bitcoin split into Bitcoin and Bitcoin Cash, everyone who had Bitcoin could use those private keys they had for Bitcoin, and they had access to that same amount of Bitcoin Cash on the Bitcoin Cash network when that happened. And what tends to happen with that is people like one or the other. So at the time, and over time, everyone that had Bitcoin Cash slowly traded it out for Bitcoin, which is why Bitcoin Cash is very minuscule, because the market voted on what Bitcoin was and Bitcoin continued to be Bitcoin.
Okay. Why don't we move on to the next set of questions, which are related to system integrity?
Okay.
Okay, so how do gold and Bitcoin protect against counterparty risk?
Well, both of them are in that same sense of you can take possession of them. I often say I shouldn't use the term physical possession as much, because taking possession of Bitcoin is kind of more taking possession of something that's internet based. But both of them, if you do take possession, someone has to physically take it from you. I actually think Bitcoin beats gold slightly in this, because I love the idea that I can carry a 24-word seed in my head if I want to and have access to all my Bitcoin. Whereas if I was trying to cross a border with gold, you run me through a metal detector, you can detect it. But so far, we don't have a way to tell, if someone's carrying around 24 words in their head that give them access to, as much Bitcoin as they've been able to acquire. You can feel free to push back on that. I know your views can be a little bit different on that front.
No, I understand what you're saying. I was going to add a little bit to the counterparty question with regard to gold. So to me, counterparty risk is a little bit different than the risk of theft. I mean, counterparty risk is broader. There's obviously the risk of theft is part of that. But the other part of that is that you have a well-intentioned counterparty that just can't deliver what he promised to deliver. So to me, gold in hand has no counterparty risk. Obviously, there's a risk of theft if you're careless with it. It's paper gold that really has the counterparty risk. And, paper gold really requires that the person who has possession of it, that's titled to you, to have the ability and willingness to honor the contract.
But I could say the same thing. I mean, Bitcoin is just Bitcoin. It's the same as, I know it's ethereal, so it doesn't have any physical form. Mm-hmm. But in the same sense, like the possession of Bitcoin is akin to me to the possession of gold, where, gold's value is the same as Bitcoin in that it's whatever the market values it at. Mm-hmm. So if I send Bitcoin to a private key or to a public key where you control the private key, you have one Bitcoin regardless of what that's worth denominated in fiat dollars. Mm-hmm. It's its own thing. And I get in trouble a little bit with bearer assets with that, because I know technically a bearer asset is the ability to pay something, but gold, and that's why I kind of consider gold and Bitcoin to be the ultimate bearer assets, because there's no promise of anything else with them. They just are what they are.
Correct, unless you leave them on the exchanges.
Unless you leave them on the exchanges. Well, that's the whole not your keys, not your coin. But right. Once again, I'll get myself in a little bit of trouble with Bitcoiners on this, because I've dealt with people who, I know one guy who's a plumber, really great guy. I met through a friend's church, and he had bought 3.5 Bitcoin during the Mt. Gox days. I think he paid like a couple $100 each for them. And at one point he moved and he lost his little piece of paper with his 24-word seed. And he's been very rightly angry about that ever since, because he can't recover them without that 24-word seed. So he bought that Bitcoin, and it's become pretty much a donation to the community in the sense that now no one can ever spend that Bitcoin. But he's sworn it off because of that. And that's kind of why I tend to think, like, if you're not technically savvy enough that you've mastered taking possession of Bitcoin, sometimes a counterparty can be a good thing for you in that sense. And I know that the purists that believe not your keys, not your coin universally don't agree with that statement. But I kind of see a world where, just like paper gold is probably always going to have a place, so will, custodial Bitcoin have a place too, because not everyone's like, the millennial generation, if they don't have a house, and a safe in that house, and they don't feel safe holding their own gold, they want someone to hold it for them. Just like if a person isn't a computer person, but wants to be part of Bitcoin's, value proposition, I don't see it as necessarily a bad thing that they buy on a reputable exchange and hold it there, or even better, buy it somewhere that gives them something for it extra. But I mean, that's a much larger debate that I would have with crypto people.
Well, I'll tell you, I would personally have a lot of difficulty, leaving a substantial portion of my wealth in a bank that was named after Magic the Gathering, like Mt. Gox.
Well, Mt. Gox has been dead and gone for a while. It's like, I mean, you're kind of comparing the modern ones that are actually regulated by the SEC. I think some of these companies that are trying to bring traditional banking services to the crypto realm are facing harsher scrutiny than a lot of banks do these days.